Finally, has the only chance to get rich in life arrived? The final opportunity to get rich has arrived, and there's no time left. You'll realize that everyone with even a little money in this world is scrambling every second to restructure their assets. This time, it's highly likely to be the most terrifying financial crisis in history. Those who don't follow financial news might not know yet, but the stocks that surged last year, where you could have made huge profits just by blindly buying, are now starting to plummet. For example, the leading stock NVDA has dropped 28%. Tesla, which soared in October last year, thanks to Trump's policies, has now reversed and fallen 46%. Giants like Amazon, Facebook, Google, any company you can name, have declined by at least 15% or more. This drop has left countless investors in a state of panic and doubt. But what if this is just the beginning? What if the market continues to spiral downward? Overnight, a wave of leveraged investors could lose everything, forced to sell off assets to cut losses, triggering a global asset collapse. By then, it's no longer just a dip. It's a full-blown crash. This has happened before in 2000, 2008, and 2020, and now it's about to happen again. However, the scariest part isn't the market crashing. It's that this is exactly what the U.S. government wants. Why? Because only when the economy collapses will the whole world have to pay the price for America. Greetings, ladies and gentlemen. Have you noticed that the Atlanta Federal Reserve, a branch of the Fed, once predicted that U.S. GDP in the first quarter would grow by 2.3%, but by the end of last month, they revised that figure from a positive 2.3% to a negative 1.5%. What does this mean? It means they're openly admitting that the U.S. has entered a recession. Just a few days later, the data was adjusted again, this time dropping to minus 2.8%. What does this mean? It means the U.S. isn't just in a recession, it's far worse than initially predicted. So if the market surged when Trump was elected, will it crash non-stop after he takes office? Declaring a national recession is an extremely sensitive matter in many places, but even the U.S. government has publicly acknowledged it. A ton of official economic data is telling us that things are getting worse lately. I feel like those old folks from decades ago, glued to the TV watching stock market news, tracking every move Trump makes to see what he'll do with the market. Do you remember? 4 or 5 years ago, when a single Trump tweet could instantly sway the market. Back then, he kept pushing the Fed to print money to stimulate the economy, causing the market to skyrocket. But this time, he hasn't said a word about the stock market. Why? Just as I was about to turn off the TV, the U.S. Treasury Secretary appeared and announced that the government's main goal right now is to keep long-term bond interest rates from rising too high. In simple terms, they want to ensure U.S. bonds remain sellable. What does this mean? Look at this chart. It shows how much money the U.S. Federal Reserve has left in its wallet. You can see that, since 2022, their wallet has been steadily shrinking. So what will they do? The answer is, they'll borrow money from the rich. The Fed will use U.S. Treasury bonds as collateral, asking financial institutions and big players to lend them money. This is called a reverse repo, a reverse repurchase agreement. In simple terms, it's the Fed borrowing money from its own financial system. Look at this chart. The higher the blue line, the more bonds the Fed has to pledge to borrow money. In other words, the Fed's borrowing capacity is being pushed to its limit. But the opposite is happening. The blue line will drop to zero this month. That means even the Federal Reserve can't borrow money from its own financial institutions anymore. There are only two possibilities. First, The financial institutions genuinely don't have any money left. If they don't have money, how can they lend to the Fed? Second, even if they do have money, they'd rather hold on to cash than accept the Treasury bonds the Fed is offering as collateral. So who will buy U.S. Treasury bonds? Right now the Fed's coffers are nearly empty, and they can't borrow. Major investors and financial institutions either don't have money, or, if they do, don't want to buy U.S. Treasury bonds. Meanwhile, countries like China, Japan, the UK, and others have been dumping U.S. bonds in recent years. This means U.S. bonds are facing a liquidity crisis. In other words, they're no longer circulating normally in the market. Why? Because more and more people want to sell, while fewer and fewer want to buy. That's why Trump's financial chief said their most critical task is ensuring long-term U.S. Treasury bonds can still be sold. The solution seems simple. Make America great again. For example, the government could cut jobs. Big corporations could lay off workers to raise unemployment rates, then impose tariffs to drive up inflation in the U.S. Most importantly, they'd impose sanctions on the world, even deliberately triggering a financial crisis or economic recession. First, they destroy, then they rebuild. That's how they make America great again. But for us, this isn't a time to waste a good crisis. When most countries can't escape this vortex, money will flow to safe havens, assets we've prepared in advance. This is the chance not just to protect our wealth, but to create a new generation of rich people. If you don't want to be a victim of this crisis, and even want to rise to a higher economic class, follow my channel. I'll keep providing you with critical information. And if you're worried you'll forget what you just heard, like this video. It'll automatically save to your playlist so you can re-watch it anytime. Now the question is, why are U.S. bonds running out of liquidity? Can't America just use its own money to pay off its debts? The answer is simple. The U.S. dollar can't be recalled. What does that mean? Listen carefully. U.S. Treasury bonds are essentially a cycle of borrowing, spending, collecting, and repaying. For example, in the past, the Fed could print $5 trillion, then use that money to buy U.S. Treasury bonds, lending it to the U.S. government. The government then owes the Fed $5 trillion. The government spends that $5 trillion buying goods from around the world, importing everything. Once that $5 trillion is spent, the government runs out of money. So, what do they do next? This is where the capitalists came up with a plan. The U.S. spent $5 trillion globally. So, if they can recover $4 trillion, only $1 trillion remains in the world, creating a global cash shortage. Then, other countries have to keep selling goods to the U.S. to earn dollars. At that point, the U.S. can print more money to buy up everything the world produces, right? So, how do they recover the money they've spread worldwide? Simple. They borrow it back. They sell U.S. Treasury bonds to others, saying, lend money to the U.S. government. And when we make a profit, we'll pay you back with interest. This means countries sell goods to the U.S., earn money from the U.S., then reinvest that money into the U.S. Essentially, Americans are working for them to pay off the debt. As a result, the world uses part of its earnings to buy U.S. Treasury bonds. The Fed prints $5 trillion. The U.S. government spends $5 trillion. Then by selling bonds, they recover $4 trillion. This prevents the world from being flooded with too many dollars, allowing the Fed to print another $5 trillion for the government to borrow. The government spends again, sells bonds to recover money, then prints more. Got it? In other words, U.S. Treasury bonds are a mechanism for the U.S. to reclaim money from the world. Their goal is to do nothing and still use printed money to buy all the goods the world produces. So, whether the U.S. government owes $36 trillion, $100 trillion, or even $1 quadrillion isn't the issue. As long as about 40% of that debt comes from other countries lending to the U.S., the system keeps running smoothly. Simply put, as long as the U.S. can recover the money it spent, keep the world short on dollars, and ensure dollars remain necessary for trade, they can keep printing money without problems. In theory, if they keep recovering debt, U.S. bonds might not even need to be repaid. The U.S. can just take on new debt to pay off old debt. For example, if the U.S. owes Japan $1 trillion and it's due, they'd ask Japan, "Want to keep lending to me? I'll keep paying you interest." If Japan agrees, the U.S. doesn't have to repay the principal. If Japan says no, the U.S. borrows $1 trillion from the UK to pay Japan, then 30 years later, figures out how to repay the UK. This is the strategy of trading time for space, or bluntly, delaying. By stretching out the timeline, the U.S. can ease immediate repayment pressure. This isn't taught in textbooks, where people often think debt must be repaid immediately. In reality, debt can be deferred or even passed off to others. But if the world sells goods to the U.S., earns dollars, and doesn't use that money to buy U.S. Treasury bonds or lend to the U.S., the U.S. can't recover the money it spent. Without that recovery, they can't keep printing money. Without printing, they'd have to work and produce to earn money to pay off debt. That's the liquidity crisis facing U.S. bonds. And that's the situation right now. In the past, 40–50% of U.S. debt was financed by other countries, but not anymore. Now, only about 20–30% of U.S. debt comes from foreign lending. This means the money the U.S. spent isn't coming back. If money doesn't return, the world no longer lacks dollars. If the U.S. keeps expanding its balance sheet and printing money at this point, the dollar will immediately plummet in value, making the world even less willing to use dollars or buy U.S. bonds, which makes money even harder to recover. So what do? Some say Trump is desperately trying to raise money to pay off debt, like raising import tariffs or even selling U.S. citizenship. For $5 million, you can become a U.S. citizen and immigrate. An international joke. As I said earlier, U.S. debt doesn't need to be repaid, nor can it be. If the U.S. actually paid off its debt, the global financial system would collapse instantly. Why? Suppose Trump succeeds in pulling money back from the world into the U.S. and uses it to pay off debt. That money would be withdrawn from the system again. Plus, the Fed, the U.S. biggest creditor, printed money and lent it to the government. If the government repays that debt now, it's essentially destroying that money, making it vanish from the system. Why does the U.S. print money? Because earning it through labor is too hard. So they print, sell bonds, recover money, and print again. If the U.S. stops selling bonds and tries to pay off debt, they can't print anymore. So they don't need to repay. Why repay? If the U.S. dares to reduce its debt, it'll destroy itself. If they recover $100 million and use it to pay off debt they didn't need to repay, they'll run out of money. When the U.S. has no money, it's not just the stock market crashing. Wall Street would shut down due to no liquidity. If no one has money, businesses have no customers. and the economy grinds to a halt. Then, the dream scenario many hope for might emerge. Houses in prime U.S. locations dropping to $100 each due to deflation. But by then, most people's assets would also drop to $1 in value, and banks would have no money to lend for home purchases. In other words, even if house prices crash, they'd still feel too expensive because asset values and incomes would collapse too. So, don't think the U.S. paying off debt and causing deflation is a good thing. It just means U.S. assets get sold off cheap and Americans get poorer. Understand this. No U.S. president dares to truly pay off the national debt. Paying off debt is just a slogan for TV audiences. The real job of the U.S. government is to find every way to reclaim money printing power, pull money back from the world, and keep printing, i.e., expand the public debt. In other words, as U.S. debt grows, so does the amount of money printed, and the dollar keeps losing value. Pumping money into the market needs assets to absorb it. Otherwise, it causes runaway inflation, spiking asset prices. So what's the advantage of small investors over giants like Warren Buffett? Flexibility. Buffett might need a year to prepare to buy or sell assets, while we can wait for the moment when cash flow floods in, pushing stock prices up, then jump in. In other words, the big players set the trend, and we ride it, make money, and get out. Now listen closely. If you don't grasp this, you won't understand the key points later. Right now, the U.S. can't pull money back because the world has stopped lending to them. Without money returning, they can't keep printing. So what do? Simple, something we've all experienced. Raise borrowing interest rates. If you lent me $1 million before, and I paid you $10,000 in interest, but now you won't lend, I'll offer $50,000 in interest to make it more appealing. That's how the U.S. successfully sucked money back from the world. But the catch: most people only buy short-term U.S. bonds. Nobody wants long-term ones. Plus, as U.S. markets rise, speculators jump in, pushing prices even higher. If you want to understand more, re-watch my video from last Monday. Every video we post is tightly connected. In short, the result is that the U.S. has pulled dollars back from the world, but that money didn't go to the government. It flowed into the U.S. stock market, into the hands of American capitalists. As I said earlier, the U.S. uses government bonds to attract global money. Without repaying immediately, they borrow for 30, then use that money to pay off short-term debts coming due. They borrow long-term to pay short-term. But now, short-term bonds still have buyers, while long-term bonds don't. No one's willing to lend to the U.S. for 30 years anymore, meaning their model of borrowing long to pay short is breaking down. When this mechanism collapses, the U.S. will have to keep paying off short-term debts at high interest rates. For example, in 2025, the U.S. has about $8 trillion in debt due, plus needs to borrow another $2 trillion. But the National Treasury only has about $600 billion, not even enough for regular spending, let alone debt repayment. Without money to pay debts, the U.S. could print more. But as I mentioned, if they print before recovering money, the dollar's value will crash instantly, turning it into worthless paper. So what will they do? This is the crux. The U.S. Treasury Secretary said their top priority is selling long-term bonds. What does that mean? When I talked about this before, some laughed, accusing me of fear-mongering. But now, Wall Street experts are saying the exact same things I did. U.S. traders are preparing for a stock market plunge, shifting money into long-term bonds. Why? Because if the U.S. wants to keep printing money without repaying debt, The only way is to force money from the U.S. stock market into long-term bonds. How? One Fed branch recently said U.S. GDP will grow negatively, and recent U.S. economic data shows the economy's in recession. Why? For example, if you're doing business in the U.S., Trump's tariffs will spike your import costs, forcing you to raise prices. Many Americans won't afford your goods, inventory piles up, and your business risks bankruptcy. If you survive, congrats, but then Trump deports illegal immigrants, cutting your cheap labor. You'd have to hire Americans, ballooning your payroll costs. If you still hang on, maybe working with the government, thinking it's a safe bet. Bad news. Trump plans to cut $1 trillion government spending. You can't hold out and try the public sector. But then Trump announces layoffs of hundreds of thousands of government workers to save money. You turn to big firms like Amazon or Facebook for jobs. But they're slashing staff too. The result? Even society's elite are jobless. What about your mortgage or car loan? With no income, how do you pay? U.S. credit card defaults are now at 2008 crisis levels. See? Trump's "Make America Great Again" is actually pushing the U.S. into recession. Why? Simple. The U.S. manipulates recession narratives, constantly signaling that even the world's strongest economy is tanking. The message? No investment is truly valuable anymore. Wherever you invest, you'll lose. In such high-risk times, U.S. government bonds offer high, stable interest rates. So you should rush to move money into U.S. bonds, not just any bonds, but long-term ones. Right now, rates are 4 to 5%. Buy now, and you lock that in for 30 years. Wait, and when everyone piles in, rates drop, bond prices rise, and you'll pay more to own them later. That's why many are racing to grab U.S. long-term bonds. 3 scenarios could unfold. First, the ideal outcome: U.S. bonds sell successfully, and the stock market doesn't crash. No problem then. But as I said, bonds and stocks are like two ends of a seesaw. Money flows to bonds, stocks lose capital. The cash needed to prop up bonds is huge. So stocks would likely decline slowly over time, needing constant cash injections to stabilize. This is unlikely though. Second, the more probable scenario: bonds surge as buyers pile in. But stocks crash fast, like in 2008 or 2020. The U.S. could then recover money from bonds, letting the Fed expand its balance sheet, print money without issues, lend it to financial giants at near zero rates, and let them buy cheap stocks to prop the market back up. That's why Warren Buffett and big institutions are hoarding cash. Whether it's scenario 1 or 2, stocks drop first. Third, the worst case: stocks crash, but money doesn't flow to bonds, so both tank. Then, the U.S. economy truly enters a prolonged recession. Why? If bonds don't sell, the government can't recover money, can't expand the balance sheet to print, and can't save the market. Printing anyway might lift stocks, but the dollar would crash. Say you earn 30% on stocks, but the dollar drops 40%, you still lose 10%. The global shock would be massive, as many nations hold tons of dollars. If dollar-priced assets collapse, the world economy spirals into a global crisis. So why is Trump doing things that harm the U.S. economy? He's holding a knife to the world's throat, saying, "Buy our bonds, and all's well. Keep refusing. And when we fall, you fall too." If a financial crisis spreads globally, what happens? Other countries will have to save the U.S. before saving themselves. Remember the 2008 crisis? It started in the U.S., spread worldwide, but the U.S. recovered fastest. America's still America, but let me repeat. If you understand how markets work, you can not only make money, but make it faster than ever before. Some might say I'm exaggerating. Honestly, I don't blame them. Maybe they're new, but at least check my past videos. I'm not proving anything or bragging. I just want to warn people about the risks and opportunities we investors see. With my small influence, I hope to help those with faith avoid this crisis. I'll also say this. In 2008, many were just construction workers or waiters at hot pot joints. Now many of them are rich. Post-2008, the wealth gap solidified. Those waiters now sit back, their assets growing, earning in a month or hour what others can't in a lifetime. I was born later, too young to seize that chance. But this time, the opportunity might come again, and I'm grown. More importantly, if it comes, I'm ready. I've rolled up my sleeves. If it doesn't, no big deal. We'll just tweak our strategy. We'll watch the U.S. bond market, but this isn't a long-term plan. It's short-term speculation. As I said, if U.S. bonds are saved, the government can keep printing, and bond prices could soar. But if they can't be saved, so our strategy is hit and run, profit, and get out, guerrilla style. If anything in today's video isn't clear, re-watch my last 2 or 3 Monday videos. My logic is tightly connected. There've been big market moves lately, but time's short, so I'll stop here. I share free knowledge on becoming rich, entrepreneurial, and an investor for financial freedom. Don't want to miss out? Follow my channel, turn on notifications, and share this video. I wish everyone who likes this video achieves financial freedom soon. If you find even 1 or 2 useful lines here to improve your life, I'm satisfied. I'm FortuneCraft, and I'll see you next time. Goodbye.